So a lot of people like to ask us, no surprise, what is the Malaysian economy going to be? I think right now, if I had to give a number 1 to 10, it's like 6 or 7 bullish. People are quite positive, but because it's Malaysia, people are always going to be like, are we exactly sure we know what we're doing? So we want to know and learn where the growth areas are for Malaysia. Now, too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. Before we start, the KLCI is one of the best performing years, I think, in history, right? Almost 15% at the peak, if I'm not mistaken. But recently, and when I say recently, I mean over the past month-ish, the KLCI has been on a downtrend. And I think a lot of it has to do with foreigners selling, right? 1 billion worth.
Yeah, in that particular just 1 week. And they actually started selling like last week, and this week also they have been selling it again. But the big question right now is what will actually prompt the foreigners to actually come and buy in companies, right? So you want to know what are the catalysts for each of these sectors, and we're going to be covering what are they for each one. So the first one, financial service. The main catalyst for financial service are your banks and insurance and all those guys, right? So the main thing that you want to look at is higher loan growth and also some regulatory changes. So regulatory changes meaning that are they more lenient in terms of approving your loan, or actually is the government pushing that particular segment that they want to grow? So for example, like residential house, right? They want to have all the B40s to actually own a home. So there is these affordable housing measures that is being implemented that can actually encourage more buyers to buy more house. So these are the two catalysts. And if you look at our recent stats, right, for mortgage and application approval, it actually has been on an uptrend for quite a huge.
In essence, it follows the GDP, right?
Yeah, correct.
It's reflective.
Yeah, but you can see that we had actually faced a few years of like muted growth. After pandemic, then it start to like rise up again. And not only that, you also can see that the loan growth, loan application and so approval for purchase of non-residential, which is your commercial, industrial. This also actually has been increasing quite a lot. So you can see it's like 27%, 28% for the first half of 2023.
Non-residential, right?
Yeah, non-residential, commercial. So what this means is actually more businesses are picking up, business activity is improving, and yeah, more companies are actually taking out more loan. So a few companies that you can actually look out, or you can look at their share price movement, right?
The big three, yeah.
Yeah, the big three, Public Bank, Maybank, also CMB, they all rally because of these few catalysts, which is data center number one, obviously. That one kind of like encourage more people to buy properties nearby that area because the value is just increasing. Then number two also is the government also has been pushing out a lot of like measures, your interest free when you actually buy a home, and also housing home ownership campaign, which is like in 2019, where they actually waive off the MOT. So all of these measures actually kind of encourage people to buy more. So that's financial. Utilities. This one is very simple.
NETR.
Yeah, NETR. If they increase tariff also, then their revenue will kind of be increased. Government policies, if let's say the government give them more subsidy or whatnot, their profit also will be increasing. So yeah, you can see that there's two main guys, YTL Power and also Tenaga. So Tenaga actually did increase some of the electricity on high consumption household. So this one they are just targeting your T15 basically, if they consume more energy, they will get pay more . And for YTL, this one is a special catalyst because I think it has been a long time since we export more electricity to Singapore. So once this catalyst actually came in 2023, right, YTL Power basically the prices are shot up. So you can see the share price movement. The past 1 year, it actually went up, but at the moment for YTL Power, it went down is because obviously there is some sort of like news regarding the MACC, and not only that, the valuation has been quite high already at the moment of time, and we don't know what is the future catalyst for YTL Power, or actually the foreigners and local institutions also don't know what is the future, what is next after their YTL Seraya that is selling the electricity to Singapore, and what is next after they are working with NVIDIA. So yeah, that will be the future catalyst that is still unknown. For Tenaga, this one is, I think it's pretty still on a uptrend. basically NETR and the tariff
Yep.
will be increasing, and government is giving less subsidy also for the people, not for tenaga. So yeah, so the third one, industrial product, this one is more broader because it can involve your metal, your fertilizer, a lot
in
of
fact,
stuff.
these are the sectors that you mentioned are Bursa categorizations.
Yes, correct.
Right?
Yeah.
I believe industrial products is the biggest.
Yes.
If not one of the biggest in terms of the number of stocks in this.
Correct. This one you are actually looking at your manufacturing demand for our for Malaysia lah. And but if we were to categorize into a catalyst, right, it's going to be higher demand for their product, and also lower fixed cost, which is your lower electricity and also fuel costs. So you can see that I put up two commodity. One is steel and the other one is cement.
Iron.
Steel, iron, and also cement down here. So you can see that steel is actually on the downtrend for the past few months, and it's still been going down, sadly. No thanks to China and also other countries that has been throwing a lot of like affordable or cheap steel to our country. But on the other hand, if we look at the cement, right, cement price actually has been going up quite a lot for the past 2 years, thanks to the consolidation of the cement players. So initially I think there's like 3 or 4 players, then right now it's becoming like 2 players only, which is your M Cement and also your Hume Industry. So they are the 2 guys that is controlling the cement market, and they have been increasing the average selling prices. And also thanks to higher construction activity, which actually encourage these measure. So yeah, you can see that mass steel, related to steel industry, this one is not doing well. Obviously, there's a lot of things related to carbon tax also, and then they also are getting hit with the banks. They are not loaning them money to expand.
I mean, it's old economy, it's high capex, which is high capex, low return. Competition is quite high in China, so why would you give loans?
Yeah, exactly. A lot of headwinds for the steel industry. And then the next one is Malaysian cement. This one actually went out a little bit, actually quite a lot already in the past few years, but recently it went down, obviously simply because it is actually the price in already for the catalyst at the moment, because construction activity, property, everything, we know already what is happening. So what is going to be the future catalyst, this one is still uncertain.
We will see.
Yeah, unless there is more activity or construction or property, then probably their demand for their product will be increasing. Fourth one, consumer product. This is also quite a broad one, but I just put it under like a food and beverage kind of like category. And this one have to do with higher disposable income and also lower raw material that they source. So you can see that Anwar actually just announced a 17%.
And then don't forget the minimum wage as well.
Yeah, minimum wage increase. And then not on top of that, the poultry players also, they are actually enjoying a low raw material prices. You can see that soybean meal and also corn has been hitting at quite a low price, and which means their profit margin will be improving. So you can see that 2 companies that is related to the poultry industry. That actually there's more. There's your Farm Fresh, and also you can even put My News, but that one is under convenience store. But the key things that I just want to look directly at the consumer segment, which is the poultry segment. You can see that their performance has been doing very well. Teoseng also and CCK, thanks to lower feed costs and also higher disposable income from the people. Okay, we are still 40% there. Now it's technology. Okay, so this have to do with higher consumer device and also auto demand, because our tech guys are only focusing on this few industry only, unfortunately. But they are trying their best to actually push up the value chain and focus more on higher quality products, like for example your related to data center or AI, chips, and advanced packaging, all those kind of things. That's what they are trying to do, and that will be the main catalyst for our tech companies to actually re-rate. So these are the main catalysts. And if you look at the statistics, right, the worldwide smartphone shipment and also the market share actually has been dropping. So that is the reason also why our tech guys have not been improving in terms of like fundamentals and also attention. But on the other hand, we look at TSMC, they are the one that is actually improving in terms of their revenue and profit. And guys that is working closely to TSMC, right, they will see that their fundamentals are also improving. So we will show you what are the companies that is related to TSMC. And these are the two companies. So one is Frontcan. This is highly related to TSMC. They basically help them to clean their chips. That's why you can see that their share price also, it kind of like correlates with TSMC's. But on the other hand, Inari focus more on the consumer devices, which is your phones. Apple
That's why
phone.
you can see.
Yeah, that's why you can see it's still going down and they are still facing like weakness. Okay, so next one is healthcare. This one have to do with pandemic and medical tourism. So if let's say there's another lockdown, probably the glove sector will like bounce back out again. And another catalyst will be the medical tourism. So if there's more tourists that visits Malaysia, that will give like an additional boost in the hospital or all those clinic businesses. So you can see that the tourist receipt actually has surpassed the pre-pandemic level, so which is good. And also you can see on the other hand, which is America actually increases their tariff on medical, rubber medical and surgical gloves. So that is also another boost in catalyst for our glove players. And you can see that the share price movement also kind of like rebounds. In fact, they actually been up for a period of time after the announcement of the tariff hike on China. On the other hand, if you look at IHH, this one, their share price also grew quite a lot. Thanks to higher tourist visits, and probably there will be more medical tourism that is happening that contributes to their earnings. Okay, next one, property. These are very simple. If let's say there's lower interest in your mortgage loan, and there's more government incentive like giving you free interest rate, free interest payment in terms of like your tax relief.
I think 7,000 ringgit. For first-time home buyers, right?
And maybe your HOC or low down payment or whatsoever measures, that will actually encourage more people to buy property. And so far, we got two catalysts, which is your RTS link and also your Johor Singapore Special Economic Zone location. So these two are the main catalysts that has driven the property prices for the past 1 year.
Yes.
But whether there's any more catalysts in terms of RTS or ECRL and all those kind of things, that one is still like uncertain. There is basically like no more catalysts indeed for property other than just these few. So you can see UMS also, the share price rally, but now is in their consolidation. In fact, it's like have been bouncing up and down. Then right now it's like going down already because there's just the Johor team, it has actually just run out already. It's you juice to the max already. So the only thing that they can grow in terms of their share price is to see whether they can capture more property sales, not only just in Johor, but perhaps in other states as well. You can see that Massing also, they went up a lot already. And right now they're also facing some sort of consolidation at the moment.
Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. All right, telecom, my least favorite sector, alongside healthcare.
This one, they have too many headwinds already, besides the steel companies. So the only way that they can actually have a catalyst is rising number of subscribers, which is very difficult because our number of...
Our penetration is so high already.
It's like 80-90%. Unless you're talking about 10-20 years ago, then probably there is still some catalyst for telecom. But right now it's just, it's at a saturation point already. But the flip side is that infrastructure sharing. So this one is basically them sharing a fixed cost. And the lower your cost, obviously your profit will be improving. So you can see that there's a few measures or initiative that is carried out by our government. Basically, there will be two guys over here. One is DNB, the other one is the second 5G network, which is going to be handled by... Actually, right now it's one telco player, which is what is it called? I cannot remember what is the other telco. There's Maxis, CelcomDigi, and also U-Mobile. U-Mobile. So U-Mobile will be the second 5G network that will be handling that. The other one will be handled by DNB, but right now I think there's like Maxis, DG, at CelcomDigi, and also they will be actually riding on DNB's their infrastructure. So if there's more of them in one category, the lesser cost that they need to incur for their business. But you can see that there's not much of interest. For Maxis, it went up, but then it kind of like go down. But if you stretch it out in a 5-year horizon, right, it's actually still dangling around like a consolidation. It's not really much of an excitement. Same for Timecom as well. After the data center, after they dispose of their AIMS. So after that, there's also not much of interesting prospects. Same for CDB. Right, they are in fact actually dropping at the moment. Okay, next one, transportation. This is also very simple. if you can charge higher in terms of your freight rates and also have low fuel prices, that will actually be the new catalyst for this particular sector. So you can see that this is the shipping route for each of the country. Right now, we are facing like a Red Sea right at the moment, but I think that kind of like there's minimized risk in terms of Red Sea. So I think the war kind of like toned down a little bit. But nevertheless, when the Red Sea did happen, right, our country's logistic guys actually have to go through a very, very long route to travel to the east coast of the Americans and also European countries. Initially, last time they can go through this middle road, which is your Red Sea, close to about Atlantic, and then your Suez Canal, and then your Gibraltar, and then to the Americans and EU. But right now, they have to go through a longer route over here, which is your Cape of Hope, and also to Panama Canal. So that one is basically the reason why there was a increase in freight rates in 2023. And also remember in Suez Canal, right, in 2021 or 2022, there was like a block in over here. That's why there's also another
congestion.
Yeah, correct. So that's also what affected the supply chain. It disrupted their supply chain at the moment. That's why they have to like U-turn back and they cannot use this, and then they have to use like a longer route, which resulting higher freight rates because of the longer travel time. So you can see that a few companies that we have here is Harbour and Tasco. Tasco after 2024 June, then they start to drop already because things are just been easing already. And obviously there's a lot of players in the logistic and transportation industry. That's why when there's no more pricing power in terms of freight rates, obviously their revenue start to drop and also profit as well. But Harbour is still okay because they are still related. They are one of the main players that are handling the transportation in the East Malaysia. Harbour and I've forgotten a few more companies, but that's why they can see that their share price is still quite at a high side. So yeah, that is for the transportation industry. Okay, this one very simple. Plantation is just higher crude oil palm oil prices.
And go watch our past video to see the full explanation.
Yeah, but basically, higher palm oil prices leading to a higher revenue and higher profit. So you can see that these are the few names: Jaya Tiasai, Innoprice, and United Plantation. All of these companies' share price start to rally because of higher CPO prices. Energy also quite similar also as palm oil. This one also have to do with Brent oil. So the higher the Brent oil, the more revenue and profit. But you can see that Brent oil has been on a stagnant at the moment. So if it's stagnant, means their revenue and profit also will not be that exciting. That's why you can see that some of the companies, Dayang and also Hibiscus, actually has not been doing quite well. In fact, Dayang has been on a downtrend. The only company that actually has been going up is Delium. So this one have to do with their services that they are, the support services that they cater for the oil platform companies. So that's why they are the only one that actually has been growing. So if the companies that is related to OPEX centric, meaning to say your Delium or even Steelhawk, right? Basically, whatever Petronas during upturn or downturn, whether they are spending capex or not spending capex, they still need to spend money on OPEX players to maintain their platform. So that's why the least affected one are these players, your Delium and your Steelhawk. But if you look at Hibiscus and Dayang, right, this one, they are more of an upstream exploration kind of like businesses. So their business is heavily reliant on the Brent oil prices. Okay, last one, it is REITs. So these are also very similar to property, lower interest rate and also higher occupancy rate.
Yep, simple enough.
Yep, and you also can see that right now there's a lot of traveling. Obviously, our government also have been pushing a lot of these tourism promotion to visit Malaysia in 2026. They spent like 550 million for this campaign. And also they did some visa-free travel between Malaysia and China. That's why you see like China, there's a lot of Chinese people in Malaysia at the moment. So yeah, you can see that some of the REIT actually went up quite a bit. Your Pavilion REIT, your KLCC, and also your IGB REIT, because I think these are the main tourist attraction places that they will actually visit. And yeah, you can see recently the share price actually went up. Okay, but those are the catalysts for each of these sectors. But you also need to know that the downside of all of these sectors. So number one, you need to know what are their headwinds, whether the headwinds that they're facing is permanent or temporary. So like your steel, right? That one, I think there will be a permanent problem. Rather than temporary. For construction, property, all these are also probably temporary. Temporary. This one depends on whether there's more activity, the new date, what can replace data center as a new catalyst. Yeah, so if they can find it, then there will be another round of boost in terms of their sector. Now, second one is analyst coverage. Obviously, when there's more analysts that is talking about that particular sector or stocks, generally you know that it's already well covered.
Which means that I think where investors need to focus on are the low coverage in our view, right?
Yeah, exactly. So when it's well covered, right, it means the particular sector will be overcrowded with institution who has actually been inside the sector already. So you need to know that they actually bought the company before they actually initiate a report. And their intention to cover that particular company is obviously they want more people to know about this company and buy up. And so that the share price can actually go up. So you want to focus on sectors that is unloved and uncovered at the moment. And in our opinion, we can give is Plantation. It used to be an unloved sector for a long time.
Yeah.
And right now, CPO prices are rising up. So probably there may be some changes in terms of opinion by them. Now, third one, this one, I think we have been saying this for the 1,000 times already. But basically, you want to find the best company in each of these sectors.
Yeah.
I mean, you can find which are the sectors that is performing well.
Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
Then you want to narrow it down to finding the best company that actually...
So if I summarize all these three, in essence, the first thing you have to figure out is the sector facing head or tailwinds, right? And how permanent and temporary it is. So you want to avoid headwinds if it is permanent. If it's temporary, might be an opportunity. You want to have tailwinds that are actually both can be temporary or permanent also.
Yes.
It's just that when it's permanent, I think the long-term trajectory of the share price will be more. But temporary means, maybe it's a one-year kind of investment.
One-off.
The second thing is once you've identified this, then you want to look at the analyst coverage in the industry. Preferably, we want there to be a mix, half say good, half say bad.
Yeah.
And we will much prefer much lower interest.
Yeah.
Okay. So then after that, we have to find what the best company is. And usually this is a mixture of the company fundamentals, like how good the quality is. And then after that would be whether or not it's undervalued or it's cheap.
Yeah.
Of course, the question is how do we find companies like that, right?
Yeah. So if you want to know how we find the best companies in each sector, well, then you can check out Fire Pro, because that is where we share our best ideas. And you can see the performance for our FPM, which is the Fire Pro Malaysian portfolio, has been doing tremendous. Just because of that's how we actually discover great companies that actually have potential, and they are initially unloved and uncovered by the institution investors. But we hope that the institution investors don't buy Fire Pro. If not, they know our secret sauce already. So yeah, you got to stick it to the retailers at the moment. But yeah, as you can see that 43% up since August 2022. And also we have another two more portfolio. The new one is FPG, Fire Pro Global. This one we're going to be ramping up for this portfolio, which is our global scenes. And you will know the return update in November 2024, and we can see how does it perform after that. TB, it is the boring portfolio, which is something that if you like dividends, if you are a conservative investor, I think this portfolio will definitely benefit you. And also we write like a very short write-up for each in the boring portfolio. And yeah, if you want to know what are the benefits, and the main feature here is basically cut short your research time in any company, and yeah, basically save you a lot of time. We do the...
And if you want to taste, just head over to the free sample section. Now guys, that will be it for the video. Again, you're going to get the links, comment section and description. See you in the next one. Bye-bye.